Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M, as you know, is the first and only global virtual accelerator in the world with the mission of helping 1 million entrepreneurs reach $1 million and beyond in annual revenue. And we run this out of Silicon Valley, but really with a global footprint, and we often have both entrepreneurs as well as guest mentors from all over the world. So today we're going to introduce you to someone from another side of the world in a moment. Let me do a bit of housekeeping before we get into the program. So this is our 295th free public mentoring roundtable. It's been going on for a long time. We've had over 40,000 people participate in these sessions, and we are delighted to be able to work with so many of you in so many different parts of the world. It's a real pleasure, real honor to be of service to so many of you. If you're live tweeting the show today, please use the hashtag 1M1M. And if you want to follow us on Twitter, our two handles are at 1M by 1M and at Romana. We publish a lot of very rich content continuously through these channels. The other channel to note is the YouTube channel, where you will find recordings of every single session of these roundtables prior, as well as this one is going to go on there as well. That channel is called 1M1M Roundtable. These are the call-in instructions. We will put this slide up later on in the program when we are ready for you to call in. But do call in. Do note that this is a roundtable. It is not designed for us to lecture you. It is a roundtable. It is something where we want your participation and so on and so forth. So this slide will be back up later in the show. Today, it's with great pleasure that I welcome Sasha Mirchandani, founder and managing director of Kae Capital and the co-founder of Mumbai Angels, one of the early pioneers of the Indian seed investment and venture capital scene, which has evolved greatly over the last almost 10 years, certainly in the last 7-8 years. Sasha, welcome. It's a great pleasure to have you here.
Thank you, and thanks for inviting me.
So, Sasha, let's start by way of introduction. If you could tell us a bit about your fund and your investments in recent years and how that dovetails with the trends in the Indian industry.
Sure. First of all, thanks again for the invite. I run Kae Capital. We're an early-stage seed and venture capital fund. We raised our first fund in 2012 February, which was approximately $25 million US. We invest really early, $50K to about $500,000, and then up to about $2 million, $2.5 million in the life of a company. We are currently in the process of raising Fund 2, which will be approximately $40 million. We've raised most of it, and we hope to close the fund in the next month or two. How this dovetails in is we do two kinds of investments primarily: India consumption and cross-border technology. So India consumption, of course, is for Indian companies in India, consumption-facing, and cross-border is companies that are born in India but primarily sell to a Western audience or a global audience. Most of them move to either California or New York.
So most of them eventually move out of India is what you're saying. That is the trend.
No, our cross-border companies are the ones that move out of India very quickly after getting born. They have proof of concept with Indian companies, etc. But they quickly move out. You generally have 2 or 3 co-founders. So one founder moves to the US, and one founder generally remains in India to run the back end of the company.
And does that also indicate that most of these companies are looking to raise their Series A perhaps in the US?
Yeah, that would be ideal, but I think what currently happens is that they raise seed in India. They also raise Series A from Indian cross-border firms. Lots of very successful Indian cross-border firms like Nexus, Inventus, etc. Yeah. And then by the time they get to Series B, there's a better probability for them to raise capital from outside.
Now, how do you characterize the key trends in the last 5 years in the Indian startup ecosystem?
I think, any trend is like a wave. We have, in a single year, you'll have multiple opportunities with multiple sectors that we look at. Just in the last year itself, there were so many opportunities in India, whether it be hyper-local, whether it be SaaS, whether it be healthcare, whether it be home services. So the idea is, as a firm, do you have a thesis on a particular sector, or are you being opportunistic? We try our best to have a thesis and go bottom up. So if we don't have a clear thesis on a particular sector, or if we're not convinced on something, we will just skip that opportunity or that entire trend and wait for the next batch of opportunities to come by. So in the last 5 years, I think there's been a lot of opportunity. I think e-commerce has probably been the biggest because of the size of the opportunity. So companies, 4 or 5 companies have reached unicorn status, all in e-commerce, whether it be Flipkart, Paytm, Snapdeal, and ShopClose, so which is unprecedented, at least for the Indian market.
Have you invested in e-commerce in India?
Yes, I invested in a company called Myntra, which was a healthy exit for us.
Which was acquired by Flipkart.
Myntra sold, that's right. I also have a company called HealthCart, where we've invested. HealthCart is doing very well. And we have a new age company, which is a company called Find, which is a hyper-local e-commerce company that we invested in last year.
And how do you view this? You mentioned the unicorn valuations of these e-commerce companies in India. The valuations are quite outrageous. How do you analyze what's going on?
Well, there's somebody paying for those companies that have taken them to these valuations. So I think 2016 will be a very interesting year. It will be a year of reckoning. It will be a separation from the men and the boys. And I think the jury's out as far as what will happen by the end of this year. But with capital now becoming far more difficult to source, I think there's going to be a lot of consolidation. So it's going to be very interesting to see what happens regarding the companies I just mentioned, with Amazon also breathing down their necks. I think all the entrepreneurs in all of these 4 companies are outstanding. So I'm sure that each of them has their own strategies to survive and then thrive. So I think 2016 will be very interesting because capital is now much, much more difficult to source. And therefore, only the best companies will survive beyond this year, in my opinion.
So the trend that we are seeing in the U.S. is that 57 companies in the last year have experienced significant down rounds. These are 57 unicorn companies who have experienced very significant down rounds. And I'm sure I don't need to underscore for you how bad a news down rounds are for entrepreneurs, but for the audience, I think we should probably explain a little bit better what down rounds mean.
Yeah, I mean, down round is obviously, company getting a lower valuation from the last time they got valued. But I think that's unfortunately is going to happen in India as well. I don't want to take guesses on which companies, but the ones that find it difficult to raise capital, in order to survive, they may have no choice but to raise down rounds. In the U.S., public market companies are now less valuable than private market companies, which doesn't make sense. And therefore, it's going to be difficult for them to even become public. And that's why you're seeing the whole, like a choke in the U.S., where a lot of these companies can't go public, because if they do, then they have to face a down round like Square did and so on and so forth. So it's going to be pretty interesting to see what happens. So
Sasha, what is your analysis of the exit scenarios in India? We haven't seen many exits yet, but the phenomenon of venture capital has been around now for a little while. How do you read that as a VC? You have to have exits. So how are you and your peers analyzing the market in that sense?
Yeah. The Indian VC ecosystem has been a promise for exits from our LPs. We constantly tell them that, but it's always been a challenge in India. Having said that, slowly but surely things are definitely improving. If you see, we've had exits like Make My Trip, which has been $1 billion company listed on NASDAQ. You've had Just Dial, which has also been more than $1 billion company. All were VC-backed companies. My own investment, Myntra, was an exit, healthy exit to Flipkart. We also had a company called Freecharge, which was sold to Snapdeal for about almost $500 million. Also a very healthy exit. So what you're seeing is the IPO is always going to be much slower, but there's a healthy M&A market getting created in India at the top end and at the bottom end. Our firm has sold 3 companies in the last 3 months, all small exits. At least there's an opportunity for people to buy where other companies are buying out our companies. Or in the case of a Freecharge or Myntra, where larger companies have bought companies for reasonably significant amounts of up to $500 million. So the exit market is
however, these are stock exits, right? These private-to-private exits are not cash exits.
No, they are cash, idle cash. And a lot of the investors in Myntra got cash. Freecharge was a lot of cash, if not all of it. So there is cash in exchange. People have made money and taken it home. So
okay, so you're saying that people are raising capital, and the case of Flipkart and some of these companies have raised a lot of cash and were in a position to do cash buyouts of other smaller private companies. But in the scenario where that cash becomes less free-flowing, I think it's been an unusually free-flowing cash availability scenario for the last year or year and a half, maybe 2 years. That situation is going to change. I think this year onwards, that situation is going to change.
Yes.
So my analysis would be that private-to-private cash exits are going to be harder to do, at least big ones.
Right.
Maybe small little tuck-in ones, okay.
No, you're right. You're right. But till they had the cash, they were doing it. They still are doing some. I have heard off the record that there's some reasonably big ones on the anvil, at least in the early part of the year, which is now. But as the year progresses and as cash becomes king, where everyone has to conserve cash, I do agree that a lot of the deals will then move into more equity swaps, which is still not ideal, but it's still an exit. So that's going to happen for a while till things settle down a bit, which is maybe at least 18 to 24 months is my guess.
Yeah. Yes, I think there are some question marks that are coming up right now that there's been some runway that the venture capital industry in India has had to play in the market. The other question out of that is the length of time it takes to grow a company in India. The traditional venture model that has succeeded in the West is of a very fast growth, 0 to 100 million in 5-6 years kind of ramp rate. And that is not happening in India. That is, both the Indian consumer, Indian consumption, as you said, market, or even the global consumption market, global technology, global consumption market, neither of them out of India has produced that level of growth pace. How do you analyze that? Because if it takes much longer, if it takes 10, 12, 15 years to build a company, then that kind of starts to be a problem for the venture capital timeline and the fund cycles, right?
Yeah, good question. You are absolutely right that India, being a smaller market, will definitely take longer to get to scale. That's why our fund is 10 plus 2 years. Having said that, I can give you a few quick examples of companies that have scaled very fast. Take Ola. It actually started in 2011, and by 2016, it's already a $5 billion market cap company. Or you take Snapdeal.
So what is the revenue level? Market cap, yes, but what is the revenue level?
Yeah, but revenue, of course, I don't have a privy into the revenue of the company. But even in the U.S., a lot of the companies, even Uber, is not generating that much revenue compared to growth because the full focus on
Uber has very significant revenue, though. They may be a highly overvalued company, but this is not a company that doesn't have a revenue model or a fast growth revenue model.
So does Ola. Ola has significant revenue. It's not like it has limited revenue. We're paying for each transaction, right? It's not free. Though they may be losing money, so is Uber. But as you look at Flipkart, its revenues are very large. So if you're talking only about revenue, then all these companies are generating huge revenue, humongous revenue. Flipkart, Snapdeal, Paytm, Ola. It's a different matter that they're losing money, but then so are some of the largest U.S. companies. It's just that the U.S. investor is more sophisticated and understands that it takes time for the network effects to play versus in India being a smaller market. But it's the same thing in some way. Because, as you can see,
but in the U.S. in general, the companies that are catering to the U.S. market, not all, in general, very fast growth companies are few and far between, even in the U.S. This ultra fast growth premise is not easy to achieve, but I think the market has a faster sales cycle, faster consumption cycle in the U.S. than in the Indian market, right?
I totally agree. So yes, that problem will remain, Samna, but as you see companies that are scaling fast, I mean, my point was not to compare the U.S. and India. We can't compare the two. The U.S. is a substantially bigger market and will remain so for many more years. But my point is that there are certain companies that are moving relatively fast, like an Ola or a Flipkart. And having said that, it will take longer in these companies because of the market. That's a fact.
Well, I think that the idea that I'm kind of trying to brainstorm with you, Sasha, and I think you're in a good position to reflect on this, is that does it make sense for the Indian market to operate in kind of like a two-phase mode where there is a set of early-stage venture capitalists like yourself as well as the angels and so forth who kind of take the company through maybe to the 5 or 7 year phase, and then another set of venture capitalists buy you guys out in private transactions because of the fund cycle issues?
Nothing is off the table. The Indian ecosystem is falling into place very nicely, but it still has a lot of opportunity for funds in different spectrums to come in. So earlier we had nothing in seed. Now there's plenty of seed funds. There's angel clubs. Then venture started coming in. Now venture is very well baked. We have large U.S. funds. We have large Indian funds that have gone homegrown. You have large private equity. So we need funds somewhere beyond Series C and till maybe pre-IPO. Like funds like a Hill House, for example. We don't have something like that in India. There's a lot of potential for something like that. So I think the reality is that as the market matures, you'll see more and more firms come in, and people will have to be innovative, right, if you want to survive.
I don't think the lack of capital is the issue, though, in India. I think, if anything, there's way too much capital, and that has been the case for a while.
Yes. No, there is, but there's no money. There's not enough capital for Series C and D versus there's enough for seed and Series A and B, and maybe some C, because you have all the regular funds that are doing AB. You've got seed now, and you've got the large private equity funds like the Blackstones, the Carlyles, the KKRs, but those are doing public market companies. There's a gap which will be filled and will soon, in my opinion.
And that is probably only applicable to your India market-facing companies, because the global market companies can raise money in the international market.
That's right. Like my portfolio company, InMobi, raised money from SoftBank. So you're right.
Yeah.
That there's enough money for the cross-border companies, the good assets. There's enough money globally for them. So you're right.
Yeah. Okay, so that's actually, it's an interesting discussion across the board. Now, which companies would you call out as some of the best companies in the Indian tech industry today, and the most likely ones to have successful exits?
So let me break that into two answers. I'll talk about just randomly companies that I like in no particular order. I can say companies like Practo. I've heard very, very good things about them.
Yes, Practo.
We have a company called 1MG in our own portfolio, which we think is going to do very well. There's a company called Zomato, which has struggled, but I think long-term management is fantastic. They do very well.
But Zomato's business model is a big problem. That business model is not doing well globally.
Yeah, I agree, but I think the team is outstanding, and they will figure it out. Is one of those
this is where I'm going to disagree with you, Sasha, because I don't think good teams can figure out bad business models. It just doesn't work that way.
Well, I agree with you to that point, but let's talk in 2 years and maybe 3, and I'll be happy to. I hope I'm not wrong, because I would want Zomato to succeed. I think they've done a wonderful job in a tough space. So if anyone can figure out that,
is a very big problem. I think Yelp, Angie's List, these are all good comparables for that company, and they're all struggling in the public market. So unless they dramatically change their business model to what, I'm not sure actually, because all of these companies have also tried to change their business models and do something to make the monetization and the profitability work better, but they're really terrible business models.
Yeah, I think it's a work in progress. I'm not an investor, so I can't comment more than that, because if I was on the board or if I was an investor, I would give you more insight. But what I've heard from people and whatever my diligence tells me is that this is a team of high quality. I also like companies like ShopClues, because I think it's very capital efficient business that built very quietly below the radar and built a unicorn company, which I think is a true unicorn. So I think that's going to continue to become even more valuable as time goes.
Yes.
I think companies like Gray Orange are under the radar, but I think they're going to be very interesting companies.
We don't know Gray Orange. What does Gray Orange do?
So Gray Orange is a Bloom portfolio company, and it saves. It's literally saving millions of dollars in warehousing costs. Robotic company. Tiger funded also. Quite like it. I like companies like Delivery. They've ridden e-commerce wave at the back end and built a really robust company. I think there's more value to be had in there. We have a small little company in our portfolio which is early but doing very well called Hello English. It's a company called Culture Alley, but they teach language, Hindi to English, scaling very fast. Tiger Global is for money in the company after us. I can go through a long list, but I'm just randomly naming companies. I like Oyo. It's still early, but I think they've done a wonderful job in a short period to build a differentiated India strategy. I think Ola, even though it's in a hyper-competitive zone with Uber, has also executed very, very well to build out where they are. So I can give you many more names, but I just thought 6 or 7 names.
So one of my favorite e-commerce companies actually is Carrot Lane. Have you seen Carrot Lane?
Yes, I have. Again, I agree. They've done very well so far. Not sure if they can become a billion-dollar company, though, but I think they can be very successful, so I would agree with you.
And what, in terms of going forward, like looking out into 2016, 2017, what trends are you seeing developing in terms of new investment opportunities?
I think we are very closely tracking healthcare, edtech, financial tech. I think we're looking at that very, very closely. We continue to look at all mobile internet opportunities because I think that will just continue to rise. We are looking very closely at logistics as well, maybe discovery-led commerce. So this is what we're looking at for the foreseeable future. Things will change as the year progresses.
And when you talk about
again, something that we like a lot.
Which one?
Sorry, go ahead. No, sorry, I said SaaS. SaaS companies as well we like a lot. Yeah.
Okay, I would like to double click down on a couple of those fintech. Are you talking about fintech facing the Indian consumer or the Indian businesses?
Yes, that's right.
Are there regulatory hurdles that you have to deal with?
Yes, that's right. So we are very careful before we make an investment because the last thing we want to do is get entangled in the law, which we are hardly qualified to tackle. So we try our best to get diligence done before we jump in, which I think is a bit unfortunate because the entrepreneurs are coming with the right intent. I would hope that regulations get cleared out where you don't have so many complications because they're building, very interesting companies that can be very disruptive and useful to the Indian consumer. So I think this current government is quite open and is open to listening. And I think I'm quite positive that as we keep communicating with the government in a positive environment, and more of these regulatory issues will get pushed from the sidelines. But yes, the answer is yes, there are some regulatory issues that we need to keep looking at each time we make an investment.
And can you talk to us a little bit about your observations on health tech? Again, India-facing health tech. The cross-border or global healthcare IT health tech is doing extremely well. It's producing really solid companies, and we track that very, very well. The question that kind of perplexes me a little bit with India is the health insurance situation. There's only a small percentage of the population that has health insurance and can afford health care in that sense. What is happening with the rest of the population, and what is the size of the population that is insured and can participate in the health tech, India-facing health tech opportunity?
Yeah, you're right that just very few people are insured. That obviously is the issue. But you can then look at the glass half empty or half full and say, when is the right time to really get into this? Because at some point this has to impact, it has to take off, because you can't have such a low penetration of this. So I think we're closely monitoring as well, and that's also a concern for us as well, because at some point the addressable market that we go after as we begin off, it can't just be a theoretic big opportunity, because it has to be realistic on the ground, as you rightly said.
Yeah.
So a lot of times we pass opportunities where we say, there's too much either regulatory issues or compliance, or this part of the pie still hasn't matured. So I think we are going to play here, but I think maybe 2 years from now or 3 years from now, let's do something else within healthcare, which is far more tangible right now. So for example, we have a company called HealthCart in our portfolio. We have one MG, as I mentioned. These are all health-related businesses, but they're, in our view, the time is right for them now versus some of the other opportunities that have to come, but maybe are down the road.
And when you look at e-commerce, how it is evolving now, it's the Indian e-commerce market has kind of happened. It's an active market, but it still operates on this cash on delivery mode and so forth. Are there indications that this is going to change, or it is starting to change, and people feel more comfortable with, providing credit cards on the internet? Because that's all going to accelerate the trends, right?
Yeah, that has to change. It's a mindset change more than anything else. It's, because logically to scale without credit cards, how do you do that? And you can't have cash on delivery going on forever. So I think it's credit cards chipping away at COT over the next couple of years, in my view, versus a big avalanche of this changing overnight. So that's something we've got to live with for longer than I would have liked. But it's inevitable. It has to happen where credit cards really take it over. But it's not going to happen very soon, in my opinion.
So in your investment thesis, are you putting any kind of assumption on when that changes? Because that will significantly change the dynamics of the market.
Yeah, I mean, we try to guess, but to be honest, we don't have the answer. So we try to see if the business we're funding can be built on COT. And if the answer is no, then we'd rather not do the investment.
All right. Now, the other sector that you mentioned is SaaS. Are you investing in SaaS as it pertains to Indian consumers or Indian businesses?
No. So we do SaaS only for global. So if there's a SaaS company that comes to us, if it's not pointed, it can start life with a few Indian customers as a beta, or maybe even for the first 6 months or a year. But very soon we will make sure that the founders are in the US, mostly in the US West Coast or East Coast. It doesn't matter, mostly the West Coast, because we want to sell to a global audience. And that's something that we're very clear about. India, B2B is still very small and nobody pays versus the US. So you can think of India as a very unique market of a combination of China and Israel. So for certain consumption businesses, B2C, India is a big enough market, and you're seeing big companies build out like a Flipkart or Ola.
Yeah.
And on the other hand, they're like Israel, where the B2B businesses all have to very quickly get going in Israel or in India, but then quickly move to the US. Versus in China, everything happens within China. So think of India as a combination of China and Israel.
Yeah, so essentially your message to entrepreneurs is that if you're doing B2C in India facing the Indian market, you can get funding. If you're doing B2B on a global basis, you can get funding. But if you're trying to do B2B in India, you're most likely not going to get funding. There are a few exceptions, but very few.
Yeah, exactly. There are few exceptions, but exactly. There'll always be exceptions. Those entrepreneurs can figure it out. But you're right.
Yeah.
That's what I'm saying.
There's an excellent company called Knowlarity that has raised funding in the B2B SaaS mode from India, facing the Indian business community. Right. But it's an exception, not the rule.
That's right, exactly.
Anything else that you want to share, Sasha?
No, I think what's happened is that with the market slowing down, it's actually a great time for us investors because, and it's a great time for entrepreneurs actually, more than us investors, because the best companies always get built in downturns, as you know, and I'm sure the audience knows. And the entrepreneurs are more frugal. He or she thinks 10 times before spending any money. They are very hyper-focused on making the more bang for the buck. And in the long run, these are the companies that always come out stronger when the market's stronger because the entrepreneurs now not just throwing money around, but building real businesses. You're focusing on the right elements of the business, which is monetization or unit economics, not just growth. You have to grow. Growth is life, but it has to be well-rounded with a lot of these other things. So we are very, very excited about this stage because we can see that the better entrepreneurs in our portfolio are all focused on the points I mentioned. And most of these guys will make it through to the next circle. The ones who can't will die, and many will die. There's lots of M&A happening. But net, this period between now and next 12 to 18 months is a great time to invest.
Well, and also I think this is this correction that is underway right now. It was very necessary. The market had gone completely out of whack. So, and it confuses entrepreneurs. When you move so far away from fundamentals, entrepreneurs get very confused.
I always blame myself as an investor if a company is not doing well because it's my responsibility to then guide the entrepreneur in the right direction. Most of them, they don't need our help because they're smart enough. When the times are tough, we have to be better and on the ball with them. And if we're not, we can't blame the entrepreneurs, we'll blame ourselves.
Well, yes and no. I mean, entrepreneurs, when they're offered huge amounts of money at ridiculous valuations, you know, getting them to say no to that is not an easy task.
Yeah,
even if you're on the board of that company, even if you're the entrepreneur's coach or whatever, I don't think it's easy to do that unless that entrepreneur has some internal discipline.
Yeah, I think my point is not to say don't take the money, but I would say, you know, use it judiciously and, you know, several other things beyond just, you know, how to use the money, where I think we could add more value. And I think there are very, very good VCs who are adding that value. I'm speaking only for myself.
All right. Well, Sasha, thanks for coming and thanks for sharing your perspective on the Indian market. It's very interesting how things are evolving and you know, maturing in the Indian market, and hopefully the exit situation is going to fall into place. And the other missing block that you're pointing out today is that the Series C, Series D money for the B2C India-facing companies is also missing, and that needs to come together. So, but I'm sure it will come together in the next few years.
Yes, it will. Thank you again for inviting me. It was a pleasure.
You're most welcome. Thank you, Sasha, for coming.
Thank you. Bye.
Folks,
bye-bye.
We're going to switch to the entrepreneur pitch portion and roundtable discussion portion of the conversation today. Now, if you're pitching today and, you know, I'm sure you've come here with some certain types of expectations, I just want you to know that we are completely on your side. We will do our best to steer you along in a direction that we think is the right one. And this is really an attempt to accelerate your process. I'm sure you're doing a great job in learning all the things that you need to learn, but for most first-time entrepreneurs, which is our community at large, it's a very steep learning curve, and we are trying to give you the tools to traverse that learning curve faster and more efficiently. Now, if you disagree with something that we discussed today, that's okay. You know, we don't have to agree on everything. I'm going to give you perspective based on my experience and my, you know, understanding of your business. Your understanding of your business, I'm sure, is considerable, and you're going to need to make decisions based on what you think is right. So just because you don't disagree or we don't disagree doesn't mean that you need to feel bad about it. This is an intellectual discussion. My goal is to be intellectually honest with you so that you know, you are able to get some meaningful, useful feedback, and then we kind of take it from there. If you're not pitching, please participate by asking questions in the chat, and I will also put up the call-in line. Now, Mayank Gupta, are you able to call in, or are you having problems with WebEx? Still, I see a bunch of messages that your call is not connecting. Okay, Mayank, while you figure that out, I'm going to go to Dushyant Parekh. Dushyant, are you on the line?
Yeah, Shamana, how are you?
Go ahead, how are you?
I'm fine. Thanks for taking me in. And, well, we have
so Dushyant, since this is a public roundtable, please put a little bit of context around your business so that the rest of the room can follow along, and then we'll go to your questions.
Sure. Let's go to the first slide.
Go ahead.
Yeah, can we get to the first slide? I think that tells a bit of what we are doing till now.
Here we go.
Basically, we have been an artisanal fabric company from India, and we have been nominated supplier to the top designers in US as well as a few other European countries. We have now been in business for more than a decade, and we are looking at expanding and relaunching ourselves. As of now, we have reached about $1 million to $1 million plus in our turnovers, and that's all by bootstrapping, or I would say internal funding. We also have achieved a penetration to about 40 plus retail stores in the US. That's predominantly in a different area altogether. That's for entirely hand-spun and hand-woven fabrics and hand-spun and hand-woven furnishing areas. So we are now looking at basically getting Shamana's help and trying to see how we can relaunch and take this forward. Yeah. Shamana, over a period, we were really thinking exactly what's our long-term goal. And we realized that we would love to become a corporation which has a high social impact and benefiting the society by offering artisanal value on both the ends, to the artisans as well as to the people, to the consumers. We also got into social link projects, and we are working on a few products that's going into patenting. Now, that's not related to fashion. I'm sure this is not something that I talked to you earlier, but we're in the process of launching this product, and seems that it's a sustainable business. Now, what we have done in this terms of a product is it's a product which is going to fight the sunstroke problem in India, as well as Middle East and all the countries which are in the high sun, which have got heavy temperatures during the summer and spring. We have tested
this has nothing to do with your core business. It seems like it's completely on a different trajectory.
Yeah.
What is are you trying to do this within the same company, or are you trying to spin it off somehow? This seems like a completely left field thing.
Right. So we have got two is following. It is completely off the track, which you might have seen doing. But this is something which was already being developed, and we are trying to include this within the company because it is helping the poor, which is facing the most sunstroke issues in India in particular. And so what query I had for the fashion business was we have a problem on positioning. We analyzed it. I went to Peace and Company in Chicago. I analyzed them. I told you in our last meeting there, and we find that they are taking a position of women empowerment as a major selling tool. Now, my query is, would such kind of a USP be needed for us, or should we just stick to our artisanal strength and artisanal value that we are offering? Because today we have a clientele which are following us, and but the question is expanding from 1 million to 10. That's our first step. That's what we are looking at.
So my take on your business, and I'm just focusing on the business of selling artisanal fabrics to the US and European fashion industry, the designers, whether it's clothing designers or home furnishing designers or retailers, is that your primary positioning has to be the quality of your artisanal products, your artisanal fabric, whether it's the design, the quality. It has to stand on the strength of that product. The USP is that people will not work you into their designs if that is not there. You can also have, you know, this empowerment of artisans in India, all this other subtext, but if the product is not good enough, nobody is going to use this product in their designs.
Perfect.
And just let me finish for a second. The story that this Peace and Company story, which is a close competitor of yours, and you're saying that they have a USP of women empowerment, again, I think that is a subtext. Their core product has to be really good for them to, and they are now owned by Nordstrom, right? They were acquired by Nordstrom, isn't it?
Right, correct.
Right, so Nordstrom would not work with them just because they are doing women empowerment. They would only work with them if their product quality is really good.
Well,
so as far as you are concerned, the first thing you have to establish in the site launch that to convey to the world is that these are fabulous artisanal fabric products. And you have to show what kind of designs they have gone into and so forth. I know you have an issue about disclosing brands because the brands who are your customers don't want you to disclose these products and so forth. That's okay. But you have to somehow figure out how to showcase that these are really good products. It would help tremendously if you could name the brands on the website. We have to figure out who allows you to name, who doesn't. But in short of that, you could mention that we are catering to 40+ brands or whatever. So women empowerment or artisanal empowerment, all this is subtext. The product needs to be front and center.
Right, right. Okay. Because we faced a bit of a problem. We did take somebody from a designer from New York who happened to be working with one major brand, and we trained her for 1.5 months, and then she couldn't really take that forward. So we seem to be closing that thing. But my major problem.
But remember, I told you this designers cannot sell. What you need is somebody who can sell your products to designers, not a designer. A designer cannot sell. Designers just don't have sales skills. Folks, by the way, just to point out, the reason I have familiarity with Dushyant's business is because he's actually a premium member. And on Monday, we had a premium roundtable, and it was so packed that Dushyant didn't get a chance to discuss his business, and we gave him kind of the first slot today at the public roundtable. Normally, public roundtables don't have premium members, but premium members take priority in the program, and we make every effort to give the premium members whatever slots they need. So, all right, Dushyant, do you have another issue that you want to go over?
Yeah, there's one more query which is related to the additional product which I was talking about. Now, basically there we have an issue with patenting. Should a product be introduced before the patent gets published, or should we hold ourselves till then? Any idea or anything?
I have no idea about the patent market in India, and this is a product that you're launching into India. So, frankly, yeah, what were you saying?
Yeah, it could be going global as well. So we are looking at global patenting under PTA, which covers something like 35 countries. So we could be looking at that.
It's an expensive process. The whole patent process, the legal infrastructure around the patent is an expensive process. Are you willing to invest that kind of money on this?
Yeah, we found a way out is that we would be doing the application, and in the meantime, get the product launched in India with the design and with design and the brand name patent, and flood the market in India. And as it gets common, we would be also getting an first movers advantage. And secondly, once by the time it gets published, then we would be definitely getting that advantage as well. But having applied, we would always stand the first chance as compared to something that we would wait otherwise till the patent gets published. So we would be just doing the application cost, and if the market fails, if market doesn't accept my product, then my cost is only limited to the application cost.
Yeah. I don't have a strong opinion on this. The thing that I do have a strong opinion on is that you are distracting yourself from your core business in a serious way, and I really dislike that as a business principle. You've heard me say this many times. Even if you were doing something related, I would probably advise you not to do it. I would advise you to stay focused on your core business. Now you're doing something completely unrelated, and I have a real problem with this.
Okay, fine, I take your point. Okay, this is
going to be a massive distraction, massive time sink. It's going to, take you away from focusing on going from 1 million to 10 million with your core business, which is what we've been working on for several months now, and hopefully that stuff is going to start falling into place. But trying to launch a whole other unrelated business in the middle of all this is a mistake, in my opinion.
Okay, perfect. Let me definitely think through it in detail before I get going on that.
Okay.
Okay, good. Nothing else from my side. Thank you.
All right, great. You're welcome. Okay, Mayank, you seem to not have been able to dial in, so unfortunately I'm not sure we can have you present if you cannot dial into the call. So I'm going to spend a little bit of time explaining to you how to use 1 million by 1 million. We can do some open Q&A, and that would be it for today. So if you like what we're doing here, please bring serious entrepreneurs into 1M1M, not the ones who come without the intention of working. Entrepreneurship is a very long game. It takes many, many, many years to go through this process and really build substantial companies. So if your expectation is that you're going to somehow do something and something great will happen within 6 months and you're off to being very rich, that's just not the way things operate. So we want people with the right expectations, and we want people who are willing to put in many years of work to build a business. So in terms of resources, you'll find everything at 1mby1m.com. You'll find a very rich blog. You'll find the Entrepreneur Journeys book series, which has 12 volumes of case study-based books through which you can learn, different topics. So whatever is your issue, see which book, which volume helps you learn that topic. Double-click down into that topic. The website is full of information, lots of videos, etc. These roundtables happen every week, and they're free. So you can come to these roundtables and participate, get feedback, etc. You need to register to either pitch or attend on the website. Our premium program is a $1,000 annual membership fee. We offer you extensive methodology guidance, a full curriculum that is delivered in video lectures and case studies. We help you with business development, and we give you extensive strategy consulting, help with financing, media relations, etc. If you go to the website, you'll find the $1 Million Club, which is a link where we provide examples and case studies of successful businesses that we have incubated. And the 1M1M value equation is an analysis of the value you get from 1M1M. In exchange of a $1,000 annual membership fee, you're getting $375,000 worth of value plus 5 to 10% equity. That's what it would cost you in the market, open market, to get this level of service. So, there's a lot of stuff on the website that you will, we think that since you are very smart, very capable entrepreneurs, you're going to be able to make your decisions. There's one thing I want to draw your attention to, which is new. We have, based on requests from our audience, we have just introduced 1M1M Basic, and we are still kind of in a limited release mode right now, which is a curriculum-only version of the 1 Million by 1 Million program. So for $99 a month, you can subscribe to the curriculum, and this does not include the roundtables or introductions or any of the other 1M1M premium services, but you can get started at a much lower price point and start dipping your toes into 1M1M. Maureen, could you put the link in the public chat, please? There you go. So if you click on that link, you will be able to see more of what's in that offer. And if you like, please sign up and get going. That's pretty much it. As I said, on the website, you'll find tons of information, video FAQs about the program, etc. The curriculum, by the way, is taught in case studies and video lectures, and we've had over 700 successful entrepreneurs participate in building this body of case studies and lessons from the trenches, essentially. So you get to learn from what other people have done, and therefore you will be able to avoid the mistakes that you don't need to really learn from committing those mistakes. We follow a lean, capital-efficient, bootstrap startups methodology, and then, when you're ready for investors, we'll be happy to introduce you to investors. The issue is that investors expect validated businesses, so you're going to have to bootstrap your way to validation. There is no choice on that. There's no going around that. We do help you, by the way, with PR. We have an extensive reach to over 250,000 people out there right now. So our community is large, and we can get the word out about your business, your product, through our channels, both social media as well as other kinds of channels. That's pretty much it. If you're building an entrepreneurship community anywhere in the world, you're welcome to use the 1M1M affiliate program and partner with us. The upcoming roundtables are every Thursday in March. We have 5 roundtables in March, so please register to pitch or attend. Vision into 2020 is a book that I wrote a few years ago. It basically has 45 of my billion-dollar ideas, and you're welcome to take any of them and morph, mash up, whatever way you want to play those ideas, you're welcome to. It's an ideation book, effectively, focused on the emerging markets, primarily India. The 1M1M Incubator in a Box is our platform through which we work with companies and governments and so forth to run their incubation programs. We do this with multiple different partners. That's pretty much it. We can go to questions. If anybody would like to call in and ask questions, now is the time. And as I said, asking good questions is how you learn, and this is the time to get any kinds of clarification that you would like on your business, on issues that you are encountering in the entrepreneurial journey. It's also a good time to introduce yourselves. If you'd like to tell us who you are, where you're joining from, network with each other, that would be great. Anybody? While you're doing that, I want to introduce you to Irina Patterson. Irina@1mby1m.com is her email. Irina will answer questions about the 1M by1M program offline. If you'd like to contact her, if you have questions after the session, you're welcome to contact her. Yes, Mayank, you have a question. I'm sorry that you were not able to dial in today. What is your question? You can type in your question in the public chat as well, Mayank. You would like my overview about what? I don't understand your question, I'm afraid. If you could clarify your question, I'll be happy to answer. If anyone else wants to ask a question, please jump in. Anybody else? Questions, comments, introductions? I see other people in the room whom I have not met before. I would love to know who you are, where are you dialing from, what brings you here, how did you get here, and what brings you, what is the objective that you're working with right now? Hello, Carl, where are you joining from? Your name is Carl or Carla? You're joining from Mexico, all right. And what is your project? What is the business that you're working on? And what do you do in social media? Mayank, if you could clarify your question, I'll be happy to answer it, but I don't understand your question. Carl, I'm not understanding how your business operates, but if you like, please come to a roundtable in March and pitch your business so that we can work on it together. This is a working session, folks. The whole point of being here and doing something together is to help you move forward with your business, to answer questions like you saw me doing with Dushyant today. We do that all the time, continuously. So you're very welcome to come and do a presentation, and I'll be happy to work with you on your business. All right, folks, I don't see any further questions, so we're going to wrap up the session today, and we'll be back here next week, and look forward to working with you then. Bye, everybody. Thank you very much. Excellent.